For more on the U.S. China trade war, I want to bring in John Quelch. He's the Dean of the University of Miami's Business School. And Dean Quelch, what do you make of these latest tariffs, and how do you predict that they'll affect the U.S. retail sector?
They will have an effect. I think in two ways. First of all, there will be a pressure to pass through the tariffs as incremental retail prices. And remember that these goods that we're now talking about, smartphones, apparel, toys, these are basic consumer goods that all households of all incomes in America have to purchase. One thing I would say is that the tariffs do not go into effect until September 1. That gives suppliers in China and importers in the United States roughly a month to accelerate production, get as much production as possible onto the water in vessels bound for the U.S. before the tariffs are applied. That's important because this is the season when a lot of retailers in the U.S. will be loading in their Christmas inventories for the Christmas selling season. And I'm sure many of those retailers are doing their best to scramble now to accelerate their imports, to forward buy their imports of goods from China to avoid the tariffs.
American retailers are unhappy with this. China is unhappy. It issued a strong reaction. It promised strong countermeasures. What do you expect from Beijing?
Well, it's been very interesting to observe the tit-for-tat over the last year. And I have to say that the Chinese countermeasures have always been proportionate in their response to the initiatives that President Trump has put forward in terms of tariff. So when President Trump initially put forward tariffs on 200 billion of Chinese goods coming into the U.S. at 10%, China responded by putting in tariffs on 10% on 60 billion of U.S. goods coming into China. Roughly a third of Chinese imports from the U.S., just as Trump had imposed the tariff on a third, roughly, of Chinese exports to the U.S. Then we ratcheted up to 25% on the 200 billion. China responded by ratcheting up the 10% to 25% on the 60 billion. So now that President Trump has imposed 10% on the remaining 300 billion of Chinese goods coming into the United States, I would expect a proportionate response from Beijing to be 10% tariffs on the remaining U.S. goods coming into China.
In the last few days, China lost its status as the U.S.'s #1 trading partner, now a status that went to Mexico. How significant is that?
I don't think it's really significant at all. Actually, Chinese exports to and imports from the U.S. are asymmetric. As you know, China exports roughly about 20% of its total exports to the U.S. And the U.S. imports roughly 20% of its total imports from China. And China and the U.S. are roughly 22% each of the global economy. So China's trade activities with the U.S. are in alignment with what you would expect from the GDP. The problem we have is that the U.S. exports to China are not in alignment, that the U.S. exports to China are only between 7 and 8% of total U.S. exports. The U.S. is simply not exporting enough to China other than Boeing airplanes and soybeans, and of course many technology-based products are restricted from being exported to China.
All right, John Quelch, Dean of the University of Miami Business School. We'll have to leave it there.